so it's in that context. And then, as I mentioned in the outset, I do think it's a risk assessment. Right? People often ask me, how much money should I put in this or that? Well, it's a question of how much money can you afford to put in something. Just a little background on me, we manage over $1 billion in gold and gold mining related investments. And I usually say, oh, you got to be able to put your investment under your pillow. You got to be able to sleep with it at night. And I don't mean actually the physical gold bar under your pillow. But what I mean is that if you get sleepless nights, then you're overexposed. So that's I think the more scientific way of approaching whether you have an adequate asset allocation. And obviously in a tighter interest rate environment, people, the retail investors bails out, the sophisticated investor does risk management. Well, it's the same thing, right? You de-lever, and that's kind of the whole point of raising rates. So with that background, I'll touch on various things. My main goal is to get you thinking about certain scenarios. And so I trust many of you follow the news. So I'm not going to try to be too repetitive about what you hear, but I will say that, of course, the Fed has been trying to be, quote unquote, higher for longer. Well, what does that even mean? To me, higher for longer is not a strategy. It's a tactic.